Wayfair was recently upgraded by Loop Capital. I think the upgrade wasn't as timely as it could have been based on the monthly chart. I do think that a bottom is between $30 and $20. And so with further decline, it would have been a better opportunity to issue a upgrade, as you could have saw an immediate increase in price. Nevertheless, let's get into reasons why they upgraded the stock now. So Loop Capital upgraded Wayfair to a hold rating and cut their 12-month price target to $50 following a recent drop in the online retail company's share price. Analysts at Loop Capital believe that the stock has already priced this in with a month-to-date decline of 16%. But like I said, I think declines will continue based on the monthly chart alone. They state the following: our bearish thesis has been that growth at Wayfair is funded by debt, and the cost of debt has increased significantly. The organic sale trends for home goods continues to decline following the COVID-related boom. It's unclear to us when home furnishings will be a growth industry again, but at the same, this share price we see risk reward evenly balanced. Now, Loop Capital expects revenue to grow this quarter with some fluctuation due to changing comparisons. Now, you do have the return of the student loan repayments that is seen as a headwind for the second half of the year, and it's going to result in a projected 1% sales decrease for 2023. However, that's anticipated to turn around in 2024 and grow at 5% year over year. Now let's talk about cash flow. They're expected to generate free cash flow of $9 million next year, following cash burn of $200 million this year. While the company could potentially manage the $117 million debt maturing in November of 2024 and $37 million maturing in April 2025 from its current cash balance, analysts at Loop Capital believe that the $754 million due in October 2025 will likely be refinanced. All right, so just kind of going back to the monthly chart, you can see that you had this extended range green candle in June. So there's no buyers at current levels until you get to sub 40. All right, so let's take it down to the weekly chart. And you can see that price did form a level of interest for sellers. However, the sell level is in the middle of the range, and so the probability of that level holding decreases, as anytime you're in the middle of a range, that's seen as equilibrium between buyers and sellers. But we'll put it in anyway at $60 because it's a level that potentially is going to be respected until it's not, right? So why it's going to be potentially respected even though it's in the middle? Well, if we go down to the daily chart, you can see that the momentum is to the downside. So potentially what you could have is a scenario where based on the upgrade, you could see a increase in price, only to see the next impulse leg down. But like I said, zooming back out to the monthly chart, once you get down to the $20 to $30 range, things become interesting, as that has been a level where buyers have continued to defend that level multiple times in the past. Let's just shade that white, and I'm going to take off this one here. So it's been a level that's been respected back in January of 2016, October of 2016. This is the pandemic lows, and then again formed a nice base this year. So again, I would not buy Wayfair based on the upgrade. I would wait for price to decline, maybe another $15 before potentially taking it long. Thanks for watching. Subscribe. Please like the video.